Hello everyone and welcome to the second of 3 charting analysis videos today. The first was released a little earlier on, that focused on 8 FX pairs. This video is going to be focused on 6 different commodity charts, starting with gold and silver and copper, finishing with WTI, Brent, Crude and natural gas. We'll follow this up shortly after with an indices video for those of you who are interested in that. Let's start with gold, as I've just mentioned, and we are seeing a bit of a correction in gold today. Some relatively heavy selling really, off the back of last week's very strong rally as we pushed through 1200 and he got as high as around just above 1260. Now, while we are seeing heavy selling in gold today, at this moment in time, I see no reason to be particularly bearish, particularly at these levels. We did run into this region, and while we did trade slightly above, this region did prove to be quite a crucial resistance level. Now, I know it's quite a broad region, 1230 to 1250, but as I've highlighted on many other videos, I tend to focus on regions, zones of support and resistance, rather than particular levels. And we can see that this region on so many occasions has been such a crucial support and resistance that it's not too surprising that we did eventually see it settle around here, and we did begin to see the start of that correction. But the reason why I'm not necessarily overly bearish at this point is because we're now trading at 1202. 1200 is a big psychological level. It's a previous level of support and resistance, but we've also got this descending trend line as well from May 2013, which just happens to intersect as well at that $1,200 level. We've also got the 100-week simple moving average as well, which, as you'd guess, also intersects at this level also. So I'm inclined not to be particularly bearish at this stage. Now, you look at the chart and it does look quite bearish, of course, but until we see that 1200 broken, like I say, I just find it very difficult to be bearish at this stage. Yes, that's a very bearish candle, but we're yet to break through Thursday's lows, and compared to the moves that we've seen over the last week, these are relatively small. We've still had some very big resistance levels broken, and as of yet they haven't been broken back to the downside. So until we see that broken, I remain bullish here, and I'll be very interested to see if we do see a reversal set up at this 1200 level. If we do see something on the lower time frames which indicate that we're going to see another push to the upside and attempt to break through those 1262 highs. If we do see a move back to the upside, of course, then I'll be looking back up towards these $1,300 level. We haven't traded at these type of levels since January of last year. Now, that's not to say that we can't see a broader move to the downside. We may find some form of support again at these 1192 levels, with it having been resistance back in October. So I'll just highlight that on the chart as well. But really, I think 1200 really is the key one for me, given how much support we actually do have at that level. I think that's going to be key, and I think there is going to be a lot of support to be found here. But like I say, we'll see how that goes. We've got to remember today, of course, that it is bank holiday in the US, where the US markets are closed, which has a big impact on liquidity. We've got half term in the UK, which again is going to have a liquidity impact as well. So that can sometimes have an adverse influence on the markets, can sometimes create a lot of volatility, which we have actually seen so far today in a number of different assets. We're seeing a similar sell-off in silver today. But again, looking at the longer term picture, bring up the weekly chart here, you can see that this is still looking quite bullish. We've got this descending trend line which we've seen broken. We've had 2 or 3 very strong weeks in silver, so a correction or a consolidation isn't something that is a huge surprise. We've got the 55-week simple moving average, which is broken on the last 2 or 3 occasions. This has held as strong resistance. That was finally broken, and we are testing that again to the downside today. But the fact that we are seeing this on the daily chart, there's a couple of things I'd really point out here. Yes, this is an evening star formation, so that is particularly bearish. So while I'm not necessarily bearish per se at this stage, because we are still above that key resistance level, key support level that was previously resistance, while I'm not particularly bearish, I'm also not particularly bullish at this stage yet either. I think what I really want to see tested now is this 1508.70. This is previous support. which we found following the break above that descending trend line. It also is the support that confirmed the break itself. So we had the break of the trend line, and then when we pulled back towards the trend line itself, that's where the buyers came in again and really drove this price higher. So this was where we had the confirmed support. Moreover, if we do see support being found again here, then this could potentially, and again this is early doors, but this could potentially lead to the formation of a head and shoulders. We've got a nice little shoulder formed here, potential head. If we see another move back towards these 1545 levels, then we could lead to the formation of a head and shoulders, although this is quite early at this stage. And it's also worth pointing out that the formation of a head and shoulders isn't necessarily bearish in itself. It's only bearish when the neckline itself is broken. So you can see the formation of a head and shoulders, but sometimes you can then see push on higher. But like I said, we're getting it's a bit early at this stage. 15.0870 is particularly key for me. And below here, of course, it's going to be that descending trend line. So at the moment, I wouldn't say I'm either bearish or bullish, or particularly bullish in silver. I'm really waiting to see how price responds at this key level. In copper, we're seeing more consolidation now. We mentioned previously that we had this established trend range between $2 and around 213.85, 214. We did break below here briefly back in January, and we've broken back into this trading range once again. So we've run into resistance once again around that 213.50 level, finding support once again around $2. So there's a couple of things that we can highlight here. One, we've clearly established a new trading range, but two, this looks like very much like a bottoming pattern. This looks like an inverse head and shoulders. So this is something worth keeping an eye on. We've also got the 89 day simple moving average here, and you can see during this downtrend, during the downtrend initially we saw it acting as support, then we found it broke and it turned into resistance. It's been resistance on a number of occasions since then. And it'll be interesting to see how it reacts again, because now it's intersected that zone of resistance which we've traded below since November. So that's between say 210 and 214. It'll be interesting to see how price reacts at that level again. Any break above that 213.50 level low, and I think that's really the completion of this inverse head and shoulders. At which point, based on the size of the move from the shoulder to the neck, we could see a move back. So what's that? 1351. So 2 to 1351. So if we double that takes what to 227. We could be looking at a move back up towards these 227 levels. Given the fact that we've got this resistance before, this is the level I'd probably be keeping an eye on. Like I say, this is never an exact science. You quite often see that with these head and shoulders or inverse head and shoulders, you get a conservative price projection and a more aggressive one. The conservative one tends to take the move from the shoulder to the neckline projected higher. Now that takes us just above a key resistance level for me, so I'd be inclined to pay more attention to this. But if we do see a move beyond that, then that may suggest that we're going to see a move significantly higher, at which point I'd be looking at potentially the more aggressive price projection, possible price projection target, which is 193.10, say, up to 213. So you're looking at around another 20.5 cent move. So you're looking maybe back towards 233.50, which takes us all the way up here. Again, maybe pulling in line with that resistance level here, but maybe getting a little bit ahead of ourselves at this moment in time. We still need to see how price reacts at these 213.50 levels, but clearly we've established this new trading range again, which coincides very nicely with the trading range we had previously, and it is looking like bottoming out at this stage. Back to the oil markets, we can see that we did make a new low late last week. So this is Thursday. We saw it fall back to around these 25.80 levels. This is when the rumours or the speculation came out that the UAE energy minister suggested that OPEC was open to talks with other oil producers to discuss possible production cuts in order to defend the low prices that we're now seeing in oil, which is harming many of the oil producing countries. So we've seen a strong rally off the back of that. But what I find quite interesting at this stage is, one, we're still trading below $30, but two, we've seen it move back towards the 50 fib of the move from 28th of January highs to February 11th lows, and now we're running into resistance. We've also got the 21 day simple moving average. I use 21 over 20 rather than 20 because it's a fib number. There's marginal difference between the two. And if we take a look at the 4-hour chart at this level, you can see that we have seen a rebound off this 50 fib already. It also almost it's pretty much just front running a $30 level as well, the $30 handle as well, which from a psychological perspective is technically quite important. Now it's how this reacts on the 4-hour chart, which I think is going to be particularly interesting here, because this is quite a nice shooting star candle, which in itself is relatively bearish. The fact that it's a green candle is not necessarily important, but I always do prefer it if we do see a lower close below the open. Then key test now is, are we going to see a move above the highs of this previous candle? If so, that may indicate that we're going to see a move slightly higher again and through the $30 handle, potentially eyeing this 200 period simple moving average, which has provided resistance along the way, also roughly coinciding with the 61.8 fib, as I say. If we fail to make a new high, then that may suggest we're going to see a move back to the downside, at which point I'll be eyeing these lows that we've got here. When we saw the rally, we saw the correction, and then we've seen the move higher. And again, this may possibly indicate some form of topping formation, but we're getting very ahead of ourselves with that at this stage. The most important thing now is, are we going to see a move through these 29.90s, through the $30 handle, in which case we could see a move to the upside. But at the moment, it looks like we are seeing a bit of selling interest around that $30 handle level. In Brent crude, we are seeing a bit more consolidation. We've seen a higher low being made, which I think could potentially be relatively important. So we had the correction, but then we've seen that higher low being made. We are seeing a move back towards those 35.50s potentially, but I think there's a lot of resistance at this level. For one, we've got the previous support, current resistance that comes in around $35.50 to $36. We've also got the 55-day simple moving average, which has provided support and resistance on a number of occasions throughout the moves over the last year or so. Again, I use 55 over 50 because it's a fib level, and to be honest, there's more difference between a 55 and a 50 than you'd of course see from the 20 to the 21 period simple moving average. But I actually find the 55 to be more accurate, or a better barometer of support for the markets on a number of occasions. You can sometimes see it be a more accurate support and resistance, and a break of it tends to give a more, I've found, gives a more accurate reading as well. So that's just my personal view, and it's obviously, it also depends on the charts as well. Charts, the time frame, as with everything, it's all about optimizing. But we have broken back above the 21-day simple moving average, having broken below it on the 9th. But that's the next key test for me. If we're looking 35.50 to 36, here we've got the 55-day simple moving average, previous support and resistance, and really we've got the descending trend line coming into play around this level as well. That descending trend line goes all the way back to the highs on June 23rd. Let's just make sure that's lined up correctly as well. It can sometimes just go off a bit. So we've got a number of key resistance levels coming up in this region at this stage, and that'll be the key test. If we can break above here, then that could possibly indicate a more bullish bias has returned to the markets, or at the very least a broader correction. Let's wrap things up with natural gas. The only thing to highlight really here, having seen the break of that rising trend line, the test of the 50 fib and the retest of the trend line failed, which was quite bearish. We've seen a move back to the downside. We've now seen the previous lows taken out. We've seen a break back below $2, and now we're seeing it trading at the lowest levels since the last week of December. With these levels broken, I think the next notable support is around this 182 level, but really I think with this level now broken, I think we could potentially be looking back towards these December lows, looking back towards this 169, 170 level. Potentially going to be a bit of a slower grind lower, and like I say, 182 may provide some support along the way. But the fact that we're continuing to make these lower highs and lower lows, and we're seeing these retracements being sold into, suggests to me that natural gas is still looking quite bearish at this stage. For more in-depth news and analysis, check out OANDA MarketPulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA FX Labs, which has a lot of great tools designed to help you with your trading.